Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Tuesday and it's the 24th of October. My name is Russell Shaw. I'm a senior market specialist at FXCM, and I'd just like to draw your attention to my email address, which is rshaw@fxcm.com. If you'd like to correspond, that's the email address to use. I'm just going to go ahead and bring up our disclaimers. I'll start off with the high risk investment warning. Hey, Howard, good morning to you. Nice to have you on the webinar as always. Hey, James. Hello and welcome. All right, let's just go ahead and bring up our market commentaries disclaimer. Thank you. And just finally, our references MarketScope 2.0 and TradingView.com. All right, let's start off with TradingView.com, straight through to the real rate. And this is the chart. You can see that the yields are starting to pull down. Okay, I'm not a big user of divergence, but something to notice here is, of course, the yield has made a higher high, whereas the RSI has made a lower high. So some sort of negative divergence coming in, perhaps suggesting that there is a loss of momentum. For me, if it drops below 50, I think that's really the telling sign. Why I think, though, it's worth pointing out the divergence on the daily is because when we go through to the weekly chart, we do still have an overbought condition. So perhaps the daily divergence suggesting to us that there is some sort of correction coming on the weekly chart. And if the real yield is starting to come down, that of course has implications. And the implications were, well, real yield seems to have a positive correlation to the US dollar. So if real yield is coming down, then we would expect greenback to be coming down. Well, we can go ahead and bring up the US dollar chart here. And you can see that we have indeed pushed all the way to zone 3 all of a sudden. And let me change the colors here. That would just help. You can see that we've dipped now on the daily chart. We've gone through from the positive side of the RSI. We've now gone to the negative side of the RSI. Hey Raj, good morning to you. Welcome. Now, let's just talk about the yields for a bit longer. And the question I'm going to pose to you, and it's a question that I've posed previously, is how much higher can yields go? And my personal opinion, subject to correction, is that we must be pretty near the apex. I'm not sure that we can go very much higher. In fact, we may be at the apex. In other words, some sort of push down from here, I think, is something that is worth considering. But, and this is the question, what's the mechanism that are going to bring yields down? The Fed is still keeping yields higher for longer. I think that is pertinent. But what I think is happening is that the bond market is just offering a ton of value at the moment. I don't know what the catalyst is going to be that is going to push money to bonds. We might already see the global situation, the conflict, etc., the uncertainty in the world starting to push money towards bonds. And I'm just looking at Naren has correctly written the two bulls have covered their shorts. Who are the two bulls? Bull Ackman and oh my goodness, I'm forgetting the king of the bonds. Who's the second bull there, Naren? Bull Ackman and Bill Grossman, of course. Thank you very much, Bill Grossman. So let's just take a look at the bond. Let's take a look at the bond charts over here and just get a feel for what we're looking at now. I'm going to bring up the IEF. That is our 10-year chart of it's an ETF specifically the 7 to 10 years. So let's go ahead, just bring that up. Sorry, I'm going to bring it up over here. Okay. Now, let's just clear off all the lines here. Something that we suggested perhaps 2 weeks ago, we did was we looked at volume, the volume histograms. I'm not sure if you guys recall that, but if I just go through to indicators, I just type in volume here. And if we just take a look at what you can see is when we go down to this area here, there's a big sell down. There's a big sell down here. I'm just going to fix it up. Let me try that again. Okay, so what we've got is this big sell down over here. And if you take a look at volume, look at these two histograms, how they jump up. To me, that looks like really a sort of what we call a selling climax. It's really sort of the end of the panic selling stage. And then even if you take a look over here, you can still see the panic selling, the selling climax. And perhaps we end at the end of that panic selling stage. And if we're at the end of that panic selling stage, what we can do is, let's go through to the weekly. So through to the weekly chart, yeah. And what we can do is we can put in our RSI. And we can just, if the RSI moves above 50. Now, if it moves above 50, then we start seeing some sort of movement up here in bonds. Now, typically what happens when the price of bonds goes up, the yields come down. The best way to see it is with a financial calculator. One of the other ways that I can just show you, when you buy a bond, you're entitled to a income stream, and that income stream is called a coupon. That coupon is going to be constant. So let's just say you've got a coupon equal to $10. Okay, let's just say that the price of the bond is equal to 100. Well, what the mathematics of what we call the running yield is you take the coupon, which would be 10, and you divide that by the price, okay, and that gives you the yield. In this case, you'd get 10%. So now, if you get, I'm just going to bring up my financial calculator. If you get a movement in price, the coupon is always going to be 10. It's going to be constant, okay? So let's say that the price drops to 90, okay? The price drops to 90. What would be the yield then? Okay, so 10 divided by 90, well, it's 11.1%. So what you can see is if price drops 100, the price was originally 100, it's gone down to 90. What happens to the yield? Yield moves up. We're calling this the running yield. There are problems with working with the running yield as opposed to the yield to maturity, but for our purposes, it's fine. what I'm trying to show you is as the bond yield goes down, what happens? Sorry, as the bond price goes down, the yield goes up. If you take a look at this, what's happened to the price here? The price has gone down. What's happened to the yield? It's moved up. Now let's just assume that the price goes, so remember the coupon's going to be constant, 10. Let's say the price goes up to 110. What's going to happen to the yield then? So we just got 10 divided by 110, and then we get 9.09%. Okay, so as the price of the bond goes down, as the price of the bond goes up, yield comes down. This is called running yield. It's called running yield. There are problems with the running yield. We're not going to get into that, but this is what it's trying to show you is that when you have the price, so this is the price adjusting, when you have price adjusting, then you get the yield adjusting. In other words, as the price starts moving up, as the price starts moving up over here, then we should get some moderation in the yield. Well, that has effects. If there's a moderation in the yield, we know there's probably going to be moderation in the US dollar. And if there's moderation in the US dollar, well, that's a safe haven. So if there's a moderation in a safe haven, then there's probably going to be some sort of positive build up in the risk part of the market. What's the risk part of the market? NASDAQ, S&P, DAX, the stock market. So the idea is, just as Naren has pointed out, we've got Bull Grossman, Bull Ackman, which are now suggesting that perhaps the bond route is at its end. Well, if it is, and we see the bond prices increase, well, that suggests bond yields come down. If bond yields come down, we go through to the greenback. Well, the greenbacks are already showing signs of easing. Okay, does everybody follow that explanation? Does everyone follow that explanation? I'm hoping you do. I'll put this up on our YouTube channel, of course, if anybody wants to rewatch it. Let's just do some technical analysis of the US dollar. Okay, starting with the weekly. And what we are seeing is the pullback here. So let's just go ahead. I'm going to make the writing a little larger for us. No worries, Katie, of course. Katie, has somebody called you? Somebody called you? Just let me know. Okay, so we've got the higher trough followed by the higher peak. And now it looks as if we're getting the next higher trough in the series. Okay, which you can see is over here. And I'm going to put this in as HT question mark. Okay, HT question mark. All right. Now, what's the possible permutations? The permutations that can happen with the dollar here? Well, if we are incorrect about the bond market, and if the bond market continues to sell off and yields continue to go higher, then we potentially have a push-up like this. Okay, then we have the higher trough, higher peak. But if we are starting to see value seep into the bond market, we might get something like this on the dollar. And we're going to have to be very, I think, savvy to see. We might get something like this. And this would be a change up. In other words, if we get a lower peak here, followed by a lower trough, then we have a fundamental shift in what's going on at the at the fundamental level. Then we start seeing, okay, yields are easing up. If yields are easing up, well, we can see the dollar is easing up. I don't know quite which way we're going to head now. Either we get that lower peak followed by the lower trough, or we get the higher trough followed by the higher peak. So I think we're at a nexus here, at some sort of potential transition, especially given that Blackman, Bill Grossman starting to suggest that we are probably at the nadir of the bond market. But if the yields are coming down, and if we're starting to see dollar showing signs of perhaps topping, what's happening with, say, euro? And let's go through to euro. Okay, and you can see here that the euro now on the weekly chart starting to make its way towards that 30-week moving average. That 30-week moving average starting to flatten out. If we go through to the daily chart, take a look what's happening on the daily chart. We have moved, okay, we've moved above 50, and we've moved into zone 1. And take a look at the Bollinger Bands. The Bollinger Bands are starting to widen. So there is definitely some movement on the base level, in that US dollar starting to feel the strain of these heightened yields, which seem to be moderating. Now, again, remember what we said, we're kind of at this fork in the road. Does the US dollar come down with yields, or does it hang around? Okay, so we kind of got to answer that question, and I don't have the answer for you at the moment, but that's the key question. Let's take a look, see what's happening on cable. Now, the jobs data that came through this morning for the UK did show a decline in the unemployment rate, and the claimant count was up. So we are seeing some upwards pressure on the pound US dollar pairing. Take a look at where we're sitting in terms of that stochastic. The stochastic is very high in terms of being in the upper quintile. I think it's risk on for this time. I think it's risk on, Raj. I think we, again, just watch it very carefully, but it seems that we're starting the day risk on, yeah. And just to see, of course, risk on, risk off. I think the best chart to look at risk on, risk off at the start of the day is DAX. So we're going to go from pound through to the DAX and see how it's opening. We've got about a minute to the cash open. So Howard's writing, there's a good chance of stock markets correcting. When you say correcting down, are you saying sort of correcting down, Howard, or correcting up? Because we have been correcting for quite some time. You can see, yeah, down. But take a look at the DAX. Take a look at the DAX here. Just put in your peaks and troughs, because the peaks and troughs will give you the trend, Howard. Look what we've got here. We've got the lower peak. So it's not that they may be correcting. They've corrected. Look, the lower peak, the lower trough. You've got it under the 30-week exponential moving average. That 30-week exponential moving average is pointing down. Now, okay, we're really at the mercy. We're really at the mercy of whether yields are going to come down and whether the bond market is going to move up. Let's just take a. Can we look at the monthly chart also of the DAX, KD? Of the DAX? Yeah. Okay. So here's the monthly chart. You can see we're getting this big correction down. We're still on the bullish side of 50, but it looks as if it's going to cross to the downside. Are we going to get a bear cross over here? Let me just fix this up. Okay, so we've kind of got this big movement down. But again, what I would highlight, KD, what I would highlight is if we go back through to the real rate, okay, so we go US 10-year minus break even. Okay, and what I would like to show you, Katie, is just put the DAX underneath. So just the DAX underneath this. Okay, Raj, speak to you tomorrow. Let's just put the DAX underneath this. Take a look here. Katie, look from here. Okay, that's really sort of the key area. Push up, see that? And then you've got the push down. Got the push down here. So it comes down to that conversation here. Are we at the are we at the bottom of the bond market or the top of the yield market? Now, what we do know, let's just take this out, is that there is a pattern. There's a pattern of how the market tends to go. It tends to go like this. Sorry, that's not what I wanted. Okay, there we go. It tends to move sort of, when we're talking about a value market, and we are talking about a value market when it comes to the bond market, it tends to be quite digital in its movements. Okay, whereas the bottom here shows what we call accumulation. And the top over here is what we call distribution. Okay, this area here would be what we call distribution. So the question is, are we at the market where there's going to be some sort of accumulation? Another instrument we can look at is called the tilts. So before we were looking at the 7 to 10s, these are the 20 plus. And what we can see is kind of, here's distribution. Here's your kind of distribution. Here is your markdown phase. And now, is there some sort of accumulation here? And that's sort of a big question mark at the moment, but it has huge ramifications for us as traders. Okay. Are there any questions? Any other questions, guys? Just let me know. Bull growth. Okay. So no, but I read the article this morning. I guess I got to have my coffee. It's Bill Gross, not Bill Grossman. Thank you, Naren. Bill Gross, Bill Ackman. Bill Gross, Bill Ackman. The two Bills. Thank you very much for that. All right. Any other questions here, guys? The king of the bond market, Bill Gross, effectively launched PIMCO into the stratosphere. All right, let's wrap up here, guys. Thank you very much for joining me this morning. Please join me again tomorrow. Tomorrow we'll also do a crypto minute. Thanks very much, guys. Have a great day ahead.